We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. We're getting all kinds of signals that the economy is very weak.
Will Bitcoin get through 30,000 on this move up? We'll see. I'm doubtful. I think we're going to probably be in this range now.
This is Bloomberg Surveillance, early edition with Francine Lacqua.
Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London, and here's what's coming up on today's program. CPI in focus. U.S. inflation expectations drop. Citi says we could see a 100 basis point Fed hike if the figures come in hot. Election in Kenya, East Africa's largest economy, heads to the polls as price pressures pummel emerging markets. Will be live in Nairobi. Plus, Mar-a-Lago raid while the FBI searches Donald Trump's residence. Seeing classified documents, the former president says it's politically motivated. Now, first thing is first, so let's check in on the markets. Remember, it is an August day, so a bit quieter than maybe in the past. European stocks down 0.3%. Now, the focus overall, and we have technology and Bitcoin. I probably would have put treasuries, so we'll bring to treasuries as well. Overall, the focus, of course, firmly on inflation. Tomorrow, we have the CPI data from the U.S. Investors betting also on strong earnings performance that can continue despite some of the recent disappointments. We have technology down 0.9%. Now let's also look at the European map. It gives us an indication. We had a great conversation with the Continental Chief Financial Officer about rationing of gas, of course, in Germany and what that does to their economy. The DAX down some 0.3%. It's again, a story about inflation. It's all about inflation and exactly what that means for central banks around the world. So that U.S. CPI print tomorrow will give us the latest clues on the path of the Federal Reserve and the U.S. economy. Now, talks of recession has been swirling recently, with Cathie Wood saying she thinks the U.S. is already in one.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same.
Well, we're now joined by Steen Jacobsen. He's Chief Investment Officer at Saxo Bank. Steen, thank you, as always, for joining us. I know you always have an outlier call, extremely interesting, and often you're right. You're basically saying don't expect any return to moderation or calm for the rest of 2022. Come on, Steen, give us a break. What should we latch onto that could provide a bit more calmness?
Well, the stock market analyst is the most bullish they've been since, I think, 2000, according to Citibank this morning. So I think that the market already is, unlike me, thinking that we have seen both peak inflation and peak rates in terms of yield. But to me, what is going on and what my major concern is right now is that this Taiwanese situation clearly to me means that we are going to see a weaponization of consumer products, of consumer electronics from China. They're going to put the pressure onto Europe and through that increase the supply chain issues and making sure that we will have a very, very high consumer-led also component of the CPI. Of course, that is adding to the fact that we have equivalent rent still rising. And overall, of course, anyone who looks at the forward curve of energy knows that things are massively expensive as we go into the winter months. So for me, Francine, I'm not super negative. I'm just saying it's higher for longer. And I think the data is confirming it, the data point being the non-farm. And to be honest, 43 days to the next Fed meeting, so a lot can happen.
A lot can happen, and a lot usually happens, especially when you're on the show. Steen, give me a sense of whether then you don't believe that actually inflation has peaked. How much higher can inflation go, given the geopolitics? Is that inflationary?
So there are actually 2 answers to your question. Of course, one is the nominal part, which is I think it will peak around 10% in terms of the CPI. I do think, like everybody else, that we'll have a like-for-like drop in the overall inflation rate. But where I disagree wholeheartedly is that I think the minimum or the maximum low that we can see is probably 400 basis point or 4% inflation in the U.S. So yes, we will come down, but we are getting nowhere close to that nirvana situation that both the stock market analyst and the fixed income market is pricing.
No nirvana. Okay, we'll get back to nirvana. Maybe we talk about dollar strength, but to another place where inflation is also in focus, Dean, that's the UK. The two candidates in the race to become the next prime minister have repeatedly sparred over the best way to protect consumers and soaring prices. So let's get a full lowdown from our Lizzie Burden. So, Lizzie, what does it mean for the BOE and the fact that they are getting so much pressure that they got it wrong?
They are, and we've had Dave Ramsden, the Bank of England Deputy Governor, speaking today, saying that he expects more interest rate rises. I wonder whether this is signalling that we're going to expect another 50 basis point rate rise down the line. But he really wants to control inflation expectations. He doesn't want them to get de-anchored. And this is the risk, because we saw all these attacks, not just on the Governor, Andrew Bailey, but on the bank and its inflation-fighting credibility. It's not just about Andrew Bailey's personal reputation. The more people lose faith in the bank's ability to do its job, and indeed, as Dave Ramsden worries, the more inflation expectations get out of control.
Yeah, and then, of course, there's all the worry about the central bank independence, but it doesn't actually change the way it works.
Well, Liz Truss might like to see the way it works change. She's proposing to have a review of the Bank of England's mandate. One of her allies, Suella Braverman, even says that they'll look at the bank's exclusive right to set interest rates. So potentially independence would come under the microscope. Another possibility would be that she would look at changing the target from inflation to nominal GDP. But as we know, Francine, it's very difficult to measure that, and it's constantly revised.
Yeah, it is. Certainly is. Lizzie, thank you so much. Our Lizzie Burden there with the very latest on the UK. Steen, what do you do with the UK right now? It seems like it's a microcosm, but because we've seen some of the stocks or earnings in general, not coming in as strong, is this a good buying opportunity?
I think it is. There is, of course, after this rout that we've seen in the market, there are pockets that are offering a massive amount of discount. One being the energy sector. The energy companies is relatively to the forward price of oil trading at a roughly 25% discount on average. I think the commodity space, of course, has been hit by this emphasis on a recession coming. And again, I think there will be slowdown in data, but you'll be much more shallow. And what I know, and which I think is of interest, is that despite all of the negative headlines, the real estate market, everything else going on in China, the China credit impulse, which leads the economy by 9 months, is turning up very, very hard. And the similar is going on in Europe. So I think as we go to the tail end of this year, yes, the energy and the consumption side will be, somewhat in conflict. But overall, we are moving to a stagflation environment where we have very high core inflation rate. On top of that, we'll have slower growth.
So, Steen, do you expect actually what the Bank of England said in terms of forecasts too steep? And does that help with tempering inflation expectations? Is it an old central bank trip?
I think what the central banks globally wants, and I think it's not part of the conversation, of course, is that one an inversion of the yield curve, and a very dramatic inversion of the yield curve. By that, they want to signal that they are serious about inflation. And I think, instead people are saying, oh, this is an inflation call. No, it's not. It's a very strong rhetoric, both from the Bank of England and to some extent the ECB and Fed, that they want to signal to the market that they are strengthening it. I don't think it really does a lot of things because, again, the private sector, the overall balance sheet of the corporates are very, very good. And if we look through the earnings, yes, it may not be living up to the nominal growth of the economy, but certainly most of the top lines are doing just fine. So this recession, if it's coming, is a story for second half of 23. It is nowhere near coming to a town near you and I right now.
Steen, thank you so much. Steen Jacobsen, their Chief Investment Officer at Saxo Bank, stays with us. We'll talk a lot more about earnings and maybe some of the havens to hedge against inflation. Coming up, we discuss earnings and what companies are doing in the face of inflation and these recessionary risks. Don't go anywhere because Steen Jacobsen stays with us. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now let's get straight to the Bloomberg First Word News. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. FBI agents have raided the Florida home of Donald Trump. Sources say the raid was part of an investigation into whether Trump took classified documents from the White House when he left office. Trump was in New York City at the time of the raid, but issued a statement saying the investigation is part of an attack aimed at keeping him from running for president in 2024. 2024. Now, the US is preparing an additional $1 billion in military aid to Ukraine. It would be the biggest drawdown of existing inventories since the start of the invasion. According to the Pentagon, the package includes long-range ammunition, anti-tank weapons, and medical vehicles and supplies. It will bring the total US security assistance for Ukraine to almost $10 billion. Norway is gearing up to limit power exports. It's an early sign of possible cross-border tensions in Europe this winter as the energy crisis deepens. Norway's energy minister says refilling reservoirs will be prioritized over power production when levels drop below seasonal averages. The country is one of Europe's top exporters of electricity. Alphabet's Google search and website temporarily stopped working for some users. Up to 40,000 were affected at one point. Alphabet blamed the outage on an electrical incident at a Google data center in Iowa. Grammy winner, singer, songwriter and actress Olivia Newton-John has died after a 30-year battle with breast cancer. She was 73 years old. The English-Australian singer had some of the biggest hits of the 1970s and 80s and, of course, is best remembered for her role as Sandy in the movie Grease. Newton-John passed away on her ranch in Southern California. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, she was definitely an icon. Thank you so much, our Leanne Gerrans there with our main news. Now, let's get back to Steen Jacobsen, Chief Investment Officer of Saxo Bank. Steen, we're talking a lot, of course, about inflation, how you measure it, and you believe, I mean, basically everything you say goes back to China. How do you see the Chinese economy dealing, and what does that mean for recessionary risks around the world? Do you think they've been overblown?
Like everybody else, I'm very concerned about the headlines that I see out of China. But at the same time, I have to rely on facts. And the fact is that the credit impulse is improving and it dramatically improving. So there seems to be, 6-9 months from now, there seems to be an additional growth component coming to not only China, but to the global economy. Of course, that will have a material impact on the oil demand of the world, where, just classically, they are 2 million barrels a day in terms of consumption. So for me, the Chinese economy is at a crossroad in the sense that the data, the political noise, the overall reporting that goes on in China is very negative. But it seems like at a sort of a micro level that the Chinese authorities is trying to contain some of this. And right now, at least, they are making the spike, they're spiking up a little bit the credit side. And I'm watching that very, very conservatively. But on the other side, I think, as I think you allude to, the Taiwanese situation in terms of global supply, I think the Chinese has learned from the Russians that the Russian was able to weaponize the energy export. I think to some extent, if you look at what goes into a Walmart in terms of Chinese produced goods, I think they too and may come up with an idea where they will slow the amount of products coming from China, especially in consumer electronics, not stopping it, not making an embargo, but it's clearly they're going to slow the flow of everything that comes out of China, and that will have a material impact on the retail prices.
See, you have an interesting call. In fact, I mean, we worry a lot about Europe. We worry a lot about the German economy. And if we start to see gas rationing, what that means into the winter months. You seem to be a little bit cooler about what we could see.
Yeah, and again, I'm sorry to be the one man out here in a sense, but I'm just relying on the data points that I understand. Again, the credit impulse for Europe is accelerating up, so positive. And at the same time, Eurocoin, the Bank of Italy, which we consider the broadest measure of predictive growth in Europe, is also turning up. So although, I mean, and I'm just back from Asia, and in Asia, everyone thinks Europe is falling into a big black hole called recession. I think there is a slowdown, and I think there will be, of course, an impairment of the consumer demand. But overall, we're talking about, in dramatic terms, it will be about a 1% a negative print on Germany if there's no gas and oil coming from Russia. But I think the European economy could withstand that also because the EU is still paying out some of the COVID payment to the countries. And overall, if you look at the balance sheet and of the private sector in Europe, it's doing extremely well. You can see that in all the consumer names that is acting and reporting.
So, Steen, what's your biggest challenge right now? Is it finding how to hedge against inflation, or just finding opportunities against from the gloomy crowd?
it's kind of interesting because the analysts are positive, the stock market is positive, but I think the pockets of risk that are really interesting is what is impacted by the call and recession. So that is energy, it's certainly commodities, and then it's also global names in consumer products. And I like all of those. I really think that we have a massive discount of energy relative to what I can observe in the forward market. I think in terms of defense stocks, they've gotten too cheap. I think people underestimate the amount of money that's going to be spent by governments to ramp up its own security and with it, the resourcing of that. So for me, the class, what we've been overweight for a long time, defense, cybersecurity, energy and commodity remains now very cheap. So I'm adding to these pockets of risk because in absolute terms, they come down in terms of their relative weight in my portfolios.
Steen, thank you so much. As always, Steen Jacobsen, their Chief Investment Officer at Saxo Bank, with that outlier call. Interesting insight into his thinking. Coming up, the FBI raided the Florida residence of Donald Trump on Monday. So we'll unpack that pretty extraordinary event. That's coming up shortly. And this is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the FBI has raided the Florida residence of Donald Trump. According to a person familiar with the search, the raid is part of an investigation of whether he took classified documents from the White House when he left office. Now, for more on all of this, we're joined by Bloomberg's Bruce Einhorn. So, Bruce, good morning to you. What do we actually know about the raid?
Well, Francine, we know that former President Trump himself issued a statement about the raid. We also know that, sorry, we're having some technical problems here. We know that the FBI agents were there from around early in the morning until 6 o'clock, after 6 o'clock in the evening, that they were looking for documents that may be related to an investigation about documents that left the White House, ended up in Florida. The National Archives had retrieved 15 boxes of documents in January, and it's possible that there are additional documents that they're looking for now. The Department of Justice has not commented on this. The White House has said that they weren't aware of the raid in advance. Beyond that, they didn't comment. The January 6th committee has not commented. President Trump himself has said that this is something that he calls a weaponization of the justice system. He says it's just a plot to undermine any presidential campaign that he might have in 2024. Additional information is forthcoming.
All right, Bruce, thank you so much. I don't know if you can hear me, Bruce. I was going to ask whether this impacts the next election, but we'll have plenty more from Bruce Einhorn. I think we're just having a bit of technical difficulties between London and Hong Kong. All right, let's check on the markets. It's a pretty quiet day, I have to say, on the markets, but we'll make it work. This is the picture overall for some of the Euro stocks. So let's bring up the European stocks, down some 0.2%. You can see S&P futures pretty much unchanged. Now, if you look at the markets, they're pretty steady. The dollar may be slipping for a second day as inflation expectations are easing. Investors betting a strong earnings performance can continue despite some of the recent disappointments. European stocks open lower. Now, contracts on the S&P 500 and the NASDAQ indices are advancing. Treasury yields, probably one of the most interesting things that we saw last week, now steady, 2.7681. Traders are waiting, of course, the inflation report tomorrow. Asian stocks earlier. I don't know if we have another market board. It'd be great if we could get that to you so that we really try and tell you the narration. But Asian stocks sliding after Hong Kong damped speculation about a looser stamp duty rules, and China also ordered a probe of the $3 trillion trust industry. Now, coming up, France waives some environmental rules for a few nuclear plants. That's amid an energy crisis. We'll have plenty more on that next. This is Bloomberg. CPI in focus. U.S. inflation expectations drop. Citi says we could see a 100 basis point Fed hike if the figures come in hot. Election in Kenya, East Africa's largest economy, heads to the polls as price pressures pummel emerging markets. We're live in Nairobi. Plus, Mar-a-Lago raid. The FBI searches Donald Trump's residence seeking classified documents. The former president says it's politically motivated. Well, good morning, everyone, and welcome to Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, the French nuclear regulator has granted a temporary waiver for 5 plants to discharge hot water into rivers. The reprieve, which may breach environmental standards, come as France struggles with an energy crisis. Well, Bloomberg's Rachel Morrison, who covers power, gas, and renewables in Europe, now joins us. Rachel, thank you so much for coming on. So tell us a little bit on how nuclear is coping this summer.
Yes, so what this really is showing us is the extreme levels that we're now getting to across Europe, but particularly in France, which has, as you know, a big nuclear fleet and acts as a big exporter, usually, of electricity to everywhere else. So this year, they're having a lot of problems throughout the fleet, with maintenance going on for much longer than usual. And then on top of that, this problem with the warm rivers. So at the moment, the weather's warm here in London. It's warm in Paris, it's warm in France, it's warm across the south of France. So where these nuclear plants are, the rivers are getting too warm for nuclear water, water that's been used to cool nuclear plants, to be returned to the rivers. But what this is showing is that electricity generation is so needed and so important at this moment that they've decided to waive those usual rules. And that could have knock-on impact for fish, for aquatic life, plants and things in the river. So it's temporary, but it really shows just how acute the situation's getting.
So, Rachel, what will happen in the winter, and what is the new case for a new build of nuclear looking like?
Well, in the winter in France, they're hoping to get a lot more of capacity back online. At the moment, only about half of the country's reactors are working. So there will be a rush to try to get that capacity back online. We already know that it's not going to be working at full capacity, as we have seen in previous years, because of this ongoing maintenance. So that's going to cause a knock-on impact for countries surrounding France. We're already seeing in Norway, the government talking about trying to limit exports. So that would be to Germany, to the UK, trying to keep their power reserves from hydro for themselves. And sorry, that's not my speaking there. And to not pass that on to other countries. So we're going to see more difficulties getting supplies to where they're needed. Also in Germany, they are talking about perhaps looking at the nuclear reactors to stay online beyond the end of the year, which is something that would be a complete U-turn in policy.
Rachel, thanks so much. Rachel Morrison there looking at some of the nuclear reaction. Now, we're now joined by Yves Desbazeille. He is Director General of Nuclear Europe, a trade association for the region's nuclear energy industry. Yves, thank you so much for joining us. Nuclear is extremely controversial, especially in certain European countries. With the energy crisis, does it change the relationship that regulators, that citizens have with nuclear power?
I think so, and it's something we've observed in the past months. There was clearly a U-turn in many countries on the public opinion with regard to nuclear, and this is something we've seen in particular in Nordic countries. But as the previous presenter was saying, also even Germany is starting to public opinion starting to shift. So I believe there is an important awareness now that we cannot depend too much on energy imports, particularly with the crisis in Ukraine.
But we're also looking, I'm looking at a figure from France. So French nuclear reactor availability has dropped to 50%. And now there's environmental concerns because of the way they're using the river, discharging some of the things there. If warmer climate is here to stay, and if it even hots up, is nuclear a viable option?
I believe there is no problem with to operate nuclear power even with a much higher temperature, and I would say heat wave we're facing today in Europe is clearly particularly hard, difficult, but we can expect in the years to come these heat waves to develop. And there are some examples of reactors being built in much higher, much hottest places like Palo Verde in US and Baraka in the Emirates. So there is no in principle problem in operating nuclear plants in hot climates.
Yeah, Yves, when you look at the U.S. climate bill, it changed the game for a couple of sectors. What does it do for nuclear?
Sorry, can you say it again?
The U.S. climate bill, when we saw the signing of that, what does it mean for nuclear energy?
I think there is not only the climate issue that should be considered. Security of supply is something that nuclear can also provide, and we see it in Europe as an important issue. So I believe there is a case for nuclear in any case, being for climate or for other consideration.
Right.
And even for the US.
Yves, talk to me a little bit about what's going on in Ukraine. I know that there has been concerns about Russia shelling the biggest nuclear plant in Europe. How does this end?
I think first of all, I would like to express our solidarity with the workers in Ukraine, which are also members of Nuclear Europe. We are very aware of how the level of professionalism they are showing by now. When it comes to the plant of Zaporizhzhia, I think it's something which I would say in principle, using nuclear energy for military operation is clearly unconscionable. And this is something we really believe should be understood by everyone.
Yeah, but is a nuclear plant disaster in Ukraine now a real risk? And what can we do to mitigate that risk?
I think the question is clearly in the question of responsibility of different parties. I would not see, I believe using this facility as, I would say, safe zone to operate artillery is clearly, as I was saying, an unconscionable attitude. When it comes to where we could go, nobody knows, and I think it's a question of who will be reasonable in the current context. But we'll see. Nothing more we can say at this stage.
Yves, thank you so much. Yves Desbazeille, there, Director General at Nuclear Europe, joining us this morning. Coming up, Kenya's election race is underway. We head to Nairobi to get the very latest. This is Bloomberg.
If inflation is a threat to the richest country in the world,
I believe that inflation is our top economic challenge right now.
For developing nations, it's a nightmare. Food prices were a principal cause of the Arab Spring, and today they're 20% higher. But it's not just inflation causing pain. It's the way policymakers are fighting it. The Fed is embarking on the most aggressive tightening cycle in a generation, and the entire financial market structure is shifting. For EM, two things are happening. One, the dollar is on a tear. Many nations borrow in dollars, and the burden of their debt is soaring. And two, rates have shot up. That hits the financially weakest first and hardest. Kenya, for example, scrapped plans to raise $1 billion in bonds. The cost of financing was too high. The ultimate fear for EM? Default. Sri Lanka defaulted earlier this year after an inflation crisis. The question for investors, who could be next? Bloomberg Economics estimates the most vulnerable are El Salvador, followed by Ghana, Egypt, Tunisia, Pakistan, and Kenya. For some governments, it's an impossible choice. Pay your debts or feed your people. Spending more to help cushion the blow of prices imperils solvency and threatens to dry up capital completely. And the alternative isn't much better. Massive economic pain, food shortages, and even revolt.
Bloomberg's Ollie Crook there with a look at dangerous combination, the effects of a rising dollar and increasing rates on emerging markets. Now, Kenya heads to the polls today. East Africa's biggest economy has been expanding rapidly, but like other developing countries, Kenya has been pummeled by inflation, rising rates, food shortages, and of course, swiftly increasing debt burdens. Well, the current president, William Ruto, and Raila Odinga, a former prime minister who's running for president for a fifth time, have pledged to address those issues. They've diverged on what to do about runaway state debt, with Odinga pledging to restructure and reprofile the nation's commercial liabilities if he wins, and Ruto's ruling out any reorganization, even as he undertook put the brakes on furthering borrowing. So let's go straight to Nairobi to make sense of all of this. We're joined by Bloomberg's Jennifer Desbazeille. Jen, great to have you on the program. So inflation is the main issue on this election. How's it hitting Kenya?
Yeah, Fran, I mean, that was a great piece that we had setting it up there. Inflation is different when you're speaking about a country like Kenya. The World Bank estimates that about a third of Kenyans are living in poverty. So when we think about inflation here, it's not just this headline number that we're focused on, this 8.3%, although that is significant. But let's break that down and think about how some of these prices are affecting everyday Kenyans. What we've seen is that consumer prices on a number of staple products here, cooking oil, fuel, maize, flour, everything has been rising at the fastest rate in over 5 years. And a lot of that is because the government has had to raise taxes to pay for some of the debt that they have taken on, but also because businesses are having to pay more to import some of these products here. And we're seeing businesses specifically being impacted and affected by inflation and having to pass that on to consumers. So just a few minutes ago, I was actually joined by one of East Africa's biggest soft commodity manufacturers, Bidco, the CEO, who talked about specifically how he's seeing his products being affected by inflation. Take a listen, Fran.
Globally, you know, your commodity prices are coming down. Petroleum, oil, it's coming down. So energy costs should be coming down. Commodities are also tapering off. So I think all that will help to ease off the whole inflation that we have in food. And a lot of it is imported inflation, right? It's because we import a lot of our products. I think that really hits us. The exchange rate is another factor that hits us there too. And I think that's also going to be tapering off. So we think that we have hit the peak.
Yeah, Fran, there, the Bidco CEO speaking about he's optimistic that inflation will come down. But right now we're hearing both of these candidates really having to speak about how they're going to address it. The government has been able to subsidize it. But again, that piles on to the debt load that Kenya is already carrying at this point in time.
So, Jen, debt, the other major issue, how will the next president deal with this?
Yeah, I mean, just going back to that thought, I mean, right now, public debt for Kenya is at about $72 billion. And a lot of that is due to what we have seen from the outgoing administration really going big on infrastructure spending. When you drive around Kenya, I've been here for a few days now, there are a lot of developments when it comes to infrastructure spending. There's the Nairobi Expressway, the toll highway that was designed, financed, and built by Chinese funds. And also we have the railway here that connects Nairobi to the port town of Mombasa. And so this next leader is going to have to figure out how to manage a lot of this debt that has been racked up by outgoing President Kenyatta and how that might affect their own agendas. Both leading candidates, William Ruto and Raila Odinga, have made a lot of promises on their own social programs to address some of the issues that everyday Kenyans are facing. But the issue is paying back some of this debt that we have from these infrastructure projects that we have seen over the past few years. So I want to take a listen to actually what we heard from one executive here in Kenya yesterday. It is the CEO. She is the CEO of the biggest brewery here in Kenya, and she was speaking, or in East Africa. She was speaking specifically about the impact of infrastructure investment on the country and what that's going to look like going forward for the next leader.
There's been great progress on road infrastructure across East Africa, and that's making it easier for us. It's making it cheaper for us, or more cost efficient, to deliver our brands across the patch. So I would say the transformation we are seeing on road infrastructure is good for business.
That was, of course, Jen Zabazaja there with the very latest from Nairobi. Also, I misspoke. It's actually William Ruto is the deputy president, of course, not the president, but we'll follow the elections very closely. Coming up, ARK Investment Chief Executive Cathie Wood says the U.S. is in a recession, but predicts we'll be coming out of it next year. We'll have plenty more on that story next. This is Bloomberg. Economics, finance, politics. This is Bloomberg Surveillance Early Edition. I'm Francine Lacqua here in London. Now, ARK Investment Management Chief Executive Cathie Wood says the Fed will usher in rate cuts next year as the economy is in recession. Despite the negative economic news, though, her fund is still invested 100% in innovation.
In terms of returns, I have to be very careful in terms of we can't promise anything. But if you're talking about the backdrop, if inflation were truly embedded in the system, 70s style, that would not, as the markets were adjusting or would be adjusting for that, that would not be a good time because interest rates probably would go up a lot. In fact, one of the really reassuring developments recently has been the drop in long-term interest rates, the 10-year Treasury yield back to closing in on 275. It has not been able to maintain anything above 3% for very long at all. So the bond market is basically saying, no, this is a very good time for innovation. However, if it reversed and went the other way, that would be bad. If our outlook for deflation is correct, cyclical deflation and secular deflation. Secular deflation associated with technologically enabled innovations. That's a good deflation. That's not a bad deflation. If those two are correct, that would be the best environment, I think, for
Can I ask about your view on Tesla in 5 years? I'm a car guy, and I've driven a Tesla. Very impressive performance, but I mean, Volkswagen has a lot of money. General Motors and Ford have a lot of know-how in this industry. Everybody's going to come at them. And isn't Tesla going to be, Friendster in 5 years compared to many different new Facebooks?
Well, we absolutely not. Tesla, if you're analyzing cars, not by brand, although its brand certainly has done wonders in the last few years. But if you look at range and power, the combination of those, most other auto manufacturers, unless they want to lose money on the cars, most are not going to be able to keep up with or to reach Tesla's combination.
Cathie Wood there, ARK Investment Chief Executive, speaking with our very own Matt Miller. I urge everyone to actually go and listen to the whole interview. It was fantastic. Cathie Wood saying that ARK's sale of some of its Coinbase holdings in that same interview last month also came after what the firm viewed as regulatory uncertainty in the crypto space. Now, this month, however, there have been some signs that the crypto winter that has dogged, for example, Coinbase for nearly 9 months might finally be thawing. Now, shares surged last week after it was announced that the crypto exchange is partnering with BlackRock to help institutional investors manage and trade Bitcoin. Well, let's bring in our crypto expert. She is our Emily Nicole. Thank you, Emily, for joining us. So Coinbase reporting earnings after market close tonight. What are we expecting to see?
So we're definitely expecting a mixed bag from Coinbase here. Even though shares have popped for the 5th consecutive day yesterday after the BlackRock announcement last week, it's definitely still going to be a down quarter for Coinbase. Analysts are expecting a decline of more than 50% on trading volumes, a 6% decrease in monthly transacting users, and a 62% drop in revenue. The crypto winter is definitely still biting on the financials, but that doesn't mean the long-term outlook is going to be any different. Most analysts still have a buy or an outperform rating on the stock, and so we kind of expect this to be a bit of a tricky period for Coinbase in the short term, but long term it's still positive for the stock.
So, Emily, will the deal with BlackRock have any lasting effects on investor optimism around Coinbase?
Well, if you listen to analysts, they definitely think that's the case. I mean, obviously, the share pop on Friday after the announcement was quite big. There seems to be a lot of investor optimism, particularly among traditional markets, at least on Coinbase shares. But in crypto, it's a slightly different story. Actually, on Friday, Bitcoin fell. A lot of the cryptocurrencies were still struggling slightly. And that kind of shows you, I guess, the difference in opinion here as to what Coinbase's partnership with BlackRock really means for the company. You'd think that it would be, a massive rise for Bitcoin and cryptocurrencies when you hear one of the biggest crypto companies is making a really huge deal with a traditional finance firm. And 3 or 4 years ago, that would definitely have been the case. But it didn't play out that way last week. And so we'll see kind of what comes further down the line.
Cathie Wood also mentioned regulatory uncertainty, Emily, as to why her funds sold off their coin shares. So what's the state of play at the minute with the SEC, Coinbase, and crypto more generally?
So Coinbase is definitely in the crosshairs for the SEC at the minute. It's found itself at the center of several disputes, some to do with, insider trading within Coinbase, some to do with, whether or not assets that it lists are considered securities or not. In the eyes of the SEC, they are. In the eyes of Coinbase, nothing it lists as a security, particularly because I don't think it would have the permissions to continue doing that if they were securities. And so it's definitely, going through a bit of a rocky patch. And as the SEC steps up its enforcement, it's added more than 50 people to its enforcement division or plans to this year. It's going to be a tough time for crypto companies, especially ones as big as Coinbase.
Emily, thank you so much. As always, making us smarter on the crypto world. Emily Nicole there with the very latest. Now, in the meantime, this is what markets are telling us. Again, in terms of volumes, they're a little bit more subdued, certainly than the end of July, because a lot of people are on holiday. U.S. equity futures pretty much steady. European stocks pretty much steady, but a little bit on the lower side. I'm looking at dollar slipping as investors betting on strong earnings performance. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kailey Leinz in New York, Danny Berger here in London, and this is Bloomberg.
I think that inflation is sticky and it's going to be very difficult to bring down, and markets need to readjust.
We could see a very choppy market ahead.
So I'm definitely not in the soft landing camp. I think we pushed too far.
We're getting all kinds of signals that the economy is very weak.
I don't think we're going to see what we saw last year when money's flowing in and it's all booming, but I don't think it's Armageddon here yet either.
This is Bloomberg Surveillance, Early Edition, with Anna Edwards, Matt Miller, and Kailey Leinz.
It's 10 a.m. in London, 5 a.m. in New York, and 5 p.m. in Hong Kong. Our top stories today. An explosive development involving Donald Trump. Federal investigators raid his Florida home looking for material the former president brought from the White House. A warning from Cathie Wood. The influential investor says the U.S. is already in a recession and the Fed will have to start loosening next year. Wood says her fund will stay fully invested. And Kenya makes a choice. Voters are deciding today who will be president of East Africa's largest economy. We're live in Nairobi. Welcome to Bloomberg Surveillance Early Edition. I'm Danny Berger in London, in for Anna Edwards, alongside Matt Miller and Kailey Leinz in New York. And Kailey, perhaps a sense of eerie calm in this market as we await for tomorrow's all-important inflation data.
Yeah, that will absolutely be crucial when that CPI crosses at 8:30 a.m. Eastern time on Wednesday. And of course, the market is really just anticipating that. I would note that in Asia overnight, risk sentiment was relatively muted. You had news of an audit in China in particular, which we'll have more on in just a moment. So that may have weighed on sentiment. But broadly, there is just the concern about recession and the Federal Reserve perhaps being more aggressive after that strong payrolls report on Friday, which of course CPI tomorrow could just reinforce. All that said, the MSCI Asia Pacific Index down about 0.3%, but Japan was actually underperforming. That was largely due to one name in particular, SoftBank, with those shares down 7% after the company reported a record loss yesterday. They're now turning to aggressive cost cuts. In other asset classes that bid into the bond market did continue in the region overnight. In New Zealand, the 10-year yield coming in 9 basis points. And then in foreign exchange, the Thai baht is actually the big outperformer in Asia, stronger against the dollar by 0.8% after the country said there is looking like the COVID-19 outbreak there is easing. Matt.
Yeah, I noticed the dollar index also coming down this morning. Take a look at what we're set up for the open right now. S&P futures are up 0.2%, and it looks pretty risk-on when you look at when you look at treasuries as well. Also gaining by 2.5 basis points as investors let go of that debt. Another tailwind for equities could be the drop in crude prices. We're down another $1.39 right now, down under $90 to $89.36. So you could see a lift, although I will repeat what Danny and Kailey said, which is that we're all awaiting that inflation number tomorrow. And the chances that you don't get a big move ahead of that number are pretty high because it makes a huge difference to your strategy. It drives the Fed. Bitcoin is down right now just about 1%, but still at $23,791. It's a relatively high level, but we got that interview with Michael Novogratz yesterday pointing out that he doesn't see us going to $30,000, and he said he doesn't see a lot of increase in institutional interest in Bitcoin. So maybe that's why you have a little bit of softness today. Danny, what do you see in terms of the European markets?
Well, we're certainly lacking direction so far this morning. Matt, it's probably not just that we're waiting for the CPI. It's also the fact that we are now firmly in the summer doldrums. Volumes over the past 5 days on average for European stocks are at the lows for the year. So not a lot of conviction in this market currently. A lot of these regional benchmarks are unchanged. DAX, that's one that's standing out as an underperformer. That one's down 0.3%. IBEX a little bit better, up more than 0.25%. So as a whole, the benchmark, the European stock 600, again, not a lot of movement, perhaps just a bit weaker, down 0.2%. Technology, that is the worst performing sector so far, 2 hours into the cash market trade here in Europe. You'll recall we had those NVIDIA earnings yesterday around when the European market was closed. So a lot of the tech stocks following on from that negativity, a miss of about $1 billion in their earnings. So that hitting some concern about chip makers in the region here. Matt, Kailey both mentioned a stronger some of the strength of the dollar coming off, that manifesting itself in a euro currently at 102.41. You'd have to imagine, though, that any gains in the euro have to come from a weaker dollar. The ECB, they've already put through all their firepower in that last meeting. Rate rises more than expected. How much further can the euro really go from here? Again, it has to be on the flip side that trade is going from. And I have a reason here that perhaps we're in the summer doldrums, or at least a symptom of it in this trading market. We're looking at travel stocks doing really well. So no one's trading. Everyone's just going out traveling, going on airplanes. Duty-free, they, of course, have duty-free stores throughout airports. Really strong earnings coming through at 3.5% rally so far this morning. So still that revenge tourism still alive and well, despite some of the travel chaos that's happening, Kailey.
And yet here you and I are at work instead of traveling this morning, Danny. All right. Well, we're here for a reason. That's because there is a lot going on today that we need to talk about, including Kenya heading to the polls for one of the closest elections in the nation's 30-year-old democracy. We'll be live from Nairobi in just a moment. Plus, earnings continue to roll out. Coinbase, the big cryptocurrency exchange, will be reporting second quarter results after the bell. And U.S. primary elections are held in Connecticut, Minnesota, Vermont, and Wisconsin, of course, happening in a very interesting day in politics.
Yeah, absolutely. Really a stunning development that you're referring to, Kailey, involving former President Donald Trump. Federal agents raided his residence at Mar-a-Lago in Florida yesterday as part of an investigation into whether he took classified documents from the White House when he left. Joe Matthew, Bloomberg Washington correspondent, joins us now from D.C. for more. And, you know, before we get into the details of this, Joe, it's really an historical raid.
That's true. It's unprecedented. We've never seen this happen to a president or former president. But I also want to be, somewhat tempered here in the language that we're using and what we actually know. Donald Trump used the word raid. We haven't heard that described by the FBI, for instance. You hear raid, you think battering rams, knocking doors down, taking people into custody.
Breaking open
We should
safes.
make clear that the Secret Service facilitated this search yesterday. Donald Trump was not home when it happened, and this is not a new case. I'll bring you back to January, when the National Archives, in fact, secured 15 boxes of documents and gifts that the president had taken to Mar-a-Lago with him from the White House that should have been turned in. They have been seeking a lot of material from Donald Trump for months and months. So to hear about this search warrant executed yesterday, knowing that a federal search warrant also requires knowledge of what they are looking for, it definitely makes us wonder. In the first 15 boxes that were found back in January, they included things like his so-called love letters with Kim Jong-un. This implies that what we saw yesterday, that there's in fact a document or more documents that could in fact be classified or top secret. That, Matt, is what they're looking for.
And of course, there are investigations ongoing for different matters of Donald Trump. Those haven't seemed to move the needle at all in terms of a potential 2024 presidential run. Joe, does this change the picture at all? The likelihood, the possibility that Trump does run again in 2 years' time?
Well, certainly, this is not a great backdrop to start a campaign yet. Donald Trump has a history of raising money and, in fact, gaining supporters on this type of thing. If you look at the outcry from Republicans on social media, it is a doom scroll this morning. Kevin McCarthy, the minority leader in the House, following on the statement you see on your screen from Donald Trump, promising an investigation into Merrick Garland, into what happened here today, and new oversight over the FBI. I will remind you, though, that Donald Trump did pick the FBI director, Christopher Wray.
Yeah, I thought that tweet was really fascinating. Joe, looking forward to your program tonight. Bloomberg's Joe Matthew broadcasts every weekday on his radio program Sound On. That's at 5 p.m. Eastern time on Bloomberg Radio. We're going to have more coverage on this so-called raid of former President Donald Trump's house in Florida later on this hour. Julie Norman joins us, a lecturer in politics and international relations at the University College London. Now, let's get back to the investment world. Cathie Wood, CEO of ARK Investment Management, says the U.S. economy is already in a recession, and the Fed will have to start loosening its policy sometime next year. She spoke with Bloomberg yesterday.
We believe we're in a recession. 2 consecutive quarters of real GDP declines is the beginning of that definition. 3 consecutive months of declines in leading indicators, which we have now, would suggest the same.
Joining us now is Sonali Basak, Bloomberg Global Finance Correspondent. And Sonali, a lot of fascinating tidbits coming out of Cathie Wood yesterday. For me, the most interesting thing was the fact that she declined to forecast returns for ARK. In the past, she's made some pretty wild profit forecasts, and now she's not.
And it's interesting because you're watching her focus very heavily on single names when she does tend to bring in some macro commentary usually. Remember, before this inflationary spike, we've seen her make a deflationary call. And now what she faces the question of into next year is one that's been looming for a while, is how vulnerable is her investment strategy to higher interest rates, higher discount rates, and how vulnerable is she to this changing investor sentiment, to the idea that companies that are not profitable may not make it as easily in capital markets in the next environment.
Well, and of course, changing sentiment has weighed on the crypto universe as well. And you had another high-profile interview with Mike Novogratz of Galaxy Digital yesterday. He gave you some targets as to where he thinks Bitcoin is going. Just take a listen to what he had to say.
Will Bitcoin get through 30,000 on this move up? We'll see. I'm doubtful. I think we're going to probably be in this range now. I'd quite frankly be happy if we're in a 22,000 or 20,000, 30,000 range for a while.
We'll see. What else did he tell you?
Well, first of all, the reason that target is interesting is because we know that he thinks that Bitcoin will eventually get to 500,000. However, if it doesn't get to 30,000 this year, then how long will it take to get to 500,000 and what will get it there? I think another interesting thing about Mike Novogratz, who's a longtime macro investor as well, what he says is that Bitcoin, classic risk asset here, is very vulnerable to the Fed, its moves, and therefore the Wednesday CPI print. I think the divergence here between the strong recognition of the macro environment around him is a little different than what you're seeing over at Cathie Wood, that idea that Fed may cut as early as next year. Obviously, huge divergence on Wall Street on that fact, and it is the fundamental.
That's the big debate. I really agree. Yeah.
Exactly. It is the investing thesis of the year, for better or worse.
Sonali, great stuff. Great interview there. Bloomberg, Sonali Basak. And if you want to state more of your crypto appetite, tune into Bloomberg Crypto. That'll be at 1 p.m. New York time, 6 p.m. in London. Kailey and Matt will take you through all the latest crypto news. Now let's turn over to China and the country's top auditors conducting a review of the $3 trillion trust industry. Now that paves the way for a potential overhaul of a key sector where losses on property loans are mounting. Now all of this takes us to the subject of today's big take, this idea that the Chinese property market is all but dead and it's offshore investors that are swallowing almost all of the losses. Bloomberg's Rebecca Chung-Wilkins, who co-wrote this story, joins us now for more. So, Rebecca, we have a crackdown on an industry that had been putting a lot of money into property. You have continued losses. What needs to happen in order for the sector to recover?
Well, I think the reality is that this is a sector that is never going to come back in the same form that it did. It's very much an end of an era. The crackdown on private property developers in particular has seen at least 25 major developers default on their debt, as you say, primarily on the dollar debt, so really hurting global investors here. And what's more, it does look like the state increasingly is going to be stepping in to play a bigger role. So we'll see more state firms coming in to take over these developers, and that's going to offer returns that look more like utilities. We're very much past the heyday of China's junk bond property market, which of course really found its roots in Hong Kong, and Hong Kong plays a really important role in this story. It really has been the purveyor of China's riskier debt, opening that market to many global investors. And just to put it into a little bit of context, you know, Evergrande's 2025 note at one point was one of the most widely traded and liquid bonds in the world. It started at its peak about 105 cents on the dollar. It's now somewhere about 7-8 cents on the dollar. So it is really an incredible sort of dramatic boom and bust story for this corner of the market. And it is going to look very, very different going forward. And as you say, you touched on that trust auditing there. It's just another emphasis for us that really the crackdown on property and reducing financial risk has only just begun.
Rebecca, thank you very much. Bloomberg's Rebecca Chung-Wilkins there. And of course, you can read her big take and others by going to Bloomberg.com or by typing NI Big Take onto your terminal. Now in Kenya, they head to the election, to the polls there. East Africa's biggest economy has been rapidly expanding. But like other developing countries and indeed developed countries, Kenya has been pummeled by inflation, rising rates, food shortages, and swiftly increasing debt burdens. Let's get into it with Bloomberg's Jennifer Zabazaja, who is in Nairobi. So, Jen, as Kenyans head to the poll, what's at stakes here given the potential outcomes of this election?
Yeah, Danny, I mean, what Kenyan voters are really going to the polls with today and with thinking about right now is really this inflation issue. I've heard you guys speak about this all day, all morning, but really it hits differently here in Kenya. We're seeing consumer prices surging for the fifth straight month to 8.3%. Consumers are paying more for just about everything they're having to buy. One of those high costs includes fuel. Another one includes maize flour, cooking oil, and a lot of these things are what Kenyans are needing to use on a day-to-day basis. What we've seen the government do is actually subsidize some of these products, but they also are having to raise taxes on some of these products because of the debt issue that the government has been enduring over the past few years. What we're seeing from outgoing President Kenyatta is that they went really big on infrastructure spending. So the pile on debt that this country is now facing is really going to be a key issue for this next leader who is leading this country.
Yeah, a lot of issues that are similar in countries around the world. Certainly inflation, but also debt. As you point out, it's a major concern in Kenya. What will the next president be facing?
Yeah, Matt, I mean, right now, public debt in Kenya is actually $72 billion. And so what we've heard from these two leading candidates, we have Deputy President William Ruto and also former Prime Minister, fifth-time candidate Raila Odinga, really diverge on how they're going to handle this debt situation, but addressing it nonetheless. So what we have from Raila Odinga is saying that maybe restructuring is an opportunity. But if he is to restructure, he's going to have to figure out another way then to finance some of these other social spending projects that he has been on the road talking a lot about. And that's why on the global economic scale, it really makes a difference how the next leader handles it. From William Ruto's perspective, he says Kenya needs to pay back its debt. Right now, a majority of income taxes are being driven towards this debt and this debt payback. And so a lot of that is from some of the infrastructure projects that we saw from outgoing President Kenyatta. And so no doubt no doubt, Matt, it is an issue that cannot be dismissed by this next leader, and the further macroeconomic issues that we're seeing on the global scale are really having an impact here. The dollar strengthening is really creating some tension with the currency here, the shilling, and that's what business leaders have been telling us for the past few days. Danny, Matt?
All right, Bloomberg's Jennifer Zabazadeh reporting from Nairobi. Thank you so much. We do have some breaking news we just want to mention. Micron will be investing $40 billion in the U.S. through the end of the decade. They will be building memory manufacturing in phases here in the U.S., which will create up to 40,000 new jobs. Of course, this news coming after the passage of the CHIPS Act here in the U.S. That stock currently a little bit lower in pre-market trading. As for some stocks that are moving a little bit more in early hours, one of the big ones to the downside is Novavax. After it cut its revenue outlook in half because of the changing demand picture for its COVID-19 vaccine here in the U.S. as well as from COVAX, that stock is down 30% before the bell. I also want to check on Boeing because it could start delivering those 787 Dreamliners finally after about 2 years as soon as tomorrow after regulatory clearance. It's only up about 0.8% though. But another big move to the upside for Bed Bath & Beyond. It is coming off of a 9-day winning streak, up more than 100% over that time. No real reason why other than it seems to just be a renaissance of the meme stocks. Once again, that stock is up 11% in early hours. Danny, it goes to show you not all that speculative behavior is totally washed out.
Yeah, I can't believe I said there's not much going on in markets right now. I mean, when meme stocks are back in full force, plenty of excitement going on. Well, coming up, Kailey, we're going to speak to someone who I'm almost positive is not on the meme stock train. In fact, he's underweight stocks. He's Max Bearish. It's Max Kettner, Chief Multi-Asset Strategist at HSBC. That interview shortly. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Matt Miller with Kailey Leinz here in New York and Danny Berger out in London. Now, we have seen some really strong gains over the past, say, 6 or 7 weeks of trading. In fact, I think we're up about 13% from the bottom in terms of the S&P. The NASDAQ also making a raging comeback from the lows that we saw in the middle of June. JP Morgan's Marko Kolanovic now says it's time to trim stocks and add to commodities. Ksenia Galuchko, Bloomberg Equities editor, joins us now with this call. And really, there are a number of really fascinating calls, Ksenia. But let's start with Kolanovic. What is he saying?
Yeah, so Kolanovic, who is one of Wall Street's biggest bulls, is saying switch out of equities into commodities. And this is quite interesting because JP Morgan in general is quite bullish on stocks. They do see gains by the end of the year. But after this huge rally where we've seen the NASDAQ almost enter bull market yesterday before pairing those gains, now strategists are saying it's time to take profit and switch into commodities, which on the contrary, since mid-June, have seen declines. And they look attractive at this point, says JP Morgan.
Yeah, always the rare instance where Kolanovic says trim stocks. So always notable when we see that. Ksenia, thank you so much for joining. That's Ksenia Galuchko from our Bloomberg Markets team. And for more market analysis, MLIV Go is where you want to head on your terminal. This is Bloomberg.
Taiwan is accusing China of using the visit of House Speaker Nancy Pelosi as a pretext to hold war games in the region. Foreign Minister Joseph Wu says Taiwan is concerned that China will invade and called the Chinese military maneuvers a violation of international law. Meanwhile, Taiwan responded to Chinese drills by holding its own live fire exercises, which took place on Taiwan's southeastern coast. And a new study from the St. Louis Fed says ending emergency jobless benefits had a significant impact on boosting employment. That may underscore Republican criticism of a Democratic program. The government provided enhanced benefits during the pandemic, increasing eligibility to many who would not have otherwise been covered. Coming up, we'll get back to the markets. Max Kettner, Chief Multi-Asset Strategist at HSBC, says go to cash. We'll discuss next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. An explosive development involving Donald Trump. Federal investigators raid his Florida home looking for material the former president brought from the White House. A warning from Cathie Wood. The influential investor says the U.S. is already in a recession and the Fed will have to start loosening next year. Wood says her funds will stay fully invested. Kenya makes a choice. Voters are deciding today who will be president of East Africa's largest economy. I'm Danny Berger in London alongside Matt Miller and Kailey Leinz, both in New York. Anna Edwards is off today. And Matt, perhaps a little bit stronger when it comes to the risk picture in the U.S. But come on, can people really put on that big of conviction trades when we got to wait for the CPI out tomorrow?
No, absolutely. I think that's the big issue, right? So we've come a long way from the June lows, but now it's really important to watch what kind of number we get in terms of inflation tomorrow, and that could drive the Fed to either continue on the rate hike path, as they have been telling us time after time that they will, or loosening if we get into a recession, as investors like Cathie Wood believe. Futures are up, but only 0.1%. More interesting to me is that investors are willing to let go of 10-year debt. Right now, the yield is up more than 3 basis points at 279.01, so floating maybe back up towards that 3% level. NYMEX crude coming down $1.17, but it's really been hovering around $90 a barrel for Texas Intermediate, and it's not out of that range right now. And speaking of something that's range-bound, Bitcoin right now holding near the top end of the range that we've seen lately, but still in it for sure at 23,698. And as we just heard from Shanali's interview with Mike Novogratz, he doesn't believe it's going to go to 30,000 anytime soon. Kailey, what do you see in terms of pre-market movers?
Well, we have to talk about the return of the meme stocks. Not all speculative fever is dead, clearly, because you have seen a massive rally in names like Bed Bath & Beyond and AMC over the last several days. Bed Bath & Beyond could today be up for a 10th day in a row. Right now, the stock is up more than 10% after gaining more than 100% over that period. And AMC is up about 65%, I believe, in the last 6 or so days. It's higher by another 2.25% this morning. Plunging to the downside, though, is Novavax. It, of course, makes a COVID-19 vaccine, but it was a little late to the game on that, and it actually cut its revenue guidance in half after the bell yesterday because it isn't expecting as much demand from the U.S. or from the COVAX program. So that stock is down more than 30%, and it's weighing on some other COVID-19 vaccine makers, even earlier movers as well, including Moderna, down about 2% before the bell, Danny.
Kailey, we're also looking at a broadly negative day when it comes to European equities. About 2.5 hours into the cash equity trade, we're down nearly 0.4%. Leading the path down is technology stocks. Those are down nearly 1%. We had those NVIDIA earnings yesterday out of the U.S. Perhaps that's a bit of drag on the sector as well. But in general, volumes continue to be really light. It is clearly summer trading. It is clearly a day ahead of big macroeconomic data. So much like the U.S. treading water. One thing that is powering higher this morning, we're looking at a stronger euro versus the dollar, still at a relatively weak level, of course, around 102.38. It's all about some of the weakness coming through of the dollar after those lower New York Fed inflation expectations came through. So not necessarily a story of euro strength independently. Finally, wanted to highlight one earning, Dufry. They, of course, operate duty-free stores and airports, the Switzerland-based company. Very strong earnings shows that despite some of the travel chaos, despite high ticket prices, consumers still willing to go out there, still willing to spend. Matt, those shares up more than 2.5%.
All right, we will continue to follow Dufry for sure, and hopefully we'll all be traveling soon as well. HSBC's Max Kettner sees a painful end to this summer's rally, though. He recommends abandoning equities and government bonds and hiding in cash on mounting risks to growth. In a note published on Thursday, his team said, quote, July's repricing higher both risk-on and risk-off assets now leaves us with an unrealistic Goldilocks backdrop. We move to maximum underweight across equities, high yield, and sovereigns, and are tactically overweight U.S. dollar cash. Max Kettner joins us now. So, Max, you have really a very pessimistic outlook at a time when, a Citigroup index says we're at peak bullishness on the sell side. Why?
Yeah, look, good morning, Matt. I guess the real big issue I have at the moment is that everyone calls this bear market rally, and I have real issues with the term bear market rally. Because in reality, what we've seen over the last couple of weeks, since sort of the middle of June, has been not a bear market rally, but a rally across anything, right? We wouldn't really characterize something as risk-on if at the same time gold goes up, the Japanese yen goes up, the Swiss franc goes up, yields go down. that is not risk on, right? It is a mix of risk on and risk off. And actually what it is, it's sort of all driven by this idea of the Fed pivot, by this idea that real rates, longer dated real rates, go down for much, much longer and much, much further. And therefore, you can sort of start buying anything again, right? You can use the dollar as your funding currency again, and you can buy anything you want, whether it's risk on and risk off. So it leaves you with this very unrealistic Goldilocks scenario where you say, well, growth is going to go down a tiny wee bit, right? But not too strong, so we don't have to be worried about growth. And at the same time, that is already going to be enough to bring inflation down. So that's great. But that also means that the Fed can ultimately save us. And that means higher valuation across the asset classes. And that is exactly where we have issues with.
By the way, if you are in equities, I noticed that if you are in equities, you're underweight U.S. equities compared to other regions. That's a very interesting call and also contrarian.
Yes, because it's mostly really related to that call on the yield side of things, right? That what we have seen now since the mid of June is that long-dated real yields have fallen from sort of 80 basis points almost to zero at the trough, right? So from here on, you've mentioned the CPI data tomorrow. From here on, it's actually delivery time, right? We've already got close to 3 cuts priced into the euro-dollar curve, for example, for next year. So if you put on growth stocks, if you put on a trade of, let's say, US equities over Eurozone equities or growth over value, if you put that on, what you have to say is that it's not going to stay at 3 cuts. It's maybe going to go towards 4 or 5 cuts. But then the problem is you're actually going to go to what I would call the bad kind of Fed pivot. The good kind of Fed pivot is the one where we say growth is going to go down a little bit, but not too much. So we don't need to worry about earnings and about growth. But it allows the Fed to already cut rates. But if we go down in terms of rates, if we go down 4, 5, 6 cuts, that actually will be probably in response to much, much weaker growth. And that can't be good for risk assets.
I mean, could we really have Fed cuts realistically in the middle of next year? I mean, doesn't the recession need to be so bad for that to be the scenario, considering, I mean, inflation, sure, perhaps it's going to slow down, but I can't imagine it would be so slowed down that it makes sense to start cutting next year.
Yeah, I guess, in terms of the recession probabilities or what kind of trades you put on right now, right? If you got 3 cuts already priced in, then, and if you put the trade on now, and if you say, well, I think that is realistic, that's not a trade, right? You're just going into and saying, yeah, that's roughly fair, fine, right? That might happen with a recession, fair enough, right? But it also might not. So the starting point really matters. What matters now is not really, okay, what's our view for the next 6, 12 months fundamentally? What really matters is what happened over the last month and a half. Is that realistic? And if we think that is realistic, is it really realistic to say, actually, we're not going to get 3 cuts, we might get 6, 7 cuts, right? We get a very deep recession. That looks a bit unrealistic. And at the same time, it looks, like you said, it looks also unrealistic that we get these sort of very, very deep cuts into that recession.
So what's the most mispriced then if that unrealistic pricing exists in this market?
Yeah, I guess it's really the real rate at the moment, right? Real yields at the moment. The Fed won't be happy to see that, right? The Fed won't be happy to see that real yields have gone down, financial conditions have eased, because that doesn't help the inflation fight. Let's bear in mind that inflation in the US looks very different from other areas like the Eurozone. In the Eurozone, it's still very much driven by commodity prices, by food and energy prices. In the US, it's very different. In the US, it is now spilling over into services inflation, into those sticky components. So the big problem in the US then is with financial conditions easing, that won't help to bring that down, right? So the thing that we've seen now in the last month and a half, with sort of everything getting swamped higher by lower real yields, so lower real yields sort of serving as the valuation anchor for all the asset classes, that will not be to the Fed's liking.
Well, Max, the other thing that has been a fortifying force for risk assets, or at least for the equity market in particular, is that earnings haven't been that awful, not as bad as feared. Is what you're saying essentially that too is too optimistic, not just betting on the Fed pivot, but betting that companies are going to be able to hang in there and preserve their margins in this kind of environment?
Well, you just said it, right? Hanging in there. I'm not sure hanging in there is a particularly bullish, bullish thesis, let's put it that way, right? So I'm not particularly sure if I want to go max overweight equities to say, well, you know what, we might hang in there. doesn't sound great to me, right? So what we have seen in the earnings season now is, yes, sort of average beat rates, average earnings surprise factor, that's fine. But excluding energy, it actually already looks below average, right? So it actually already looks a little bit, a little bit cloudier. And also, what our analysis is showing that when we look at earnings sentiment, so what company management are talking about things like key financial terms, margins, revenue, the macro backdrop, all that has been actually consistently weakening over the last couple of months, and the earnings season was no difference, was no exception to that at all. It continues to weaken. That sentiment towards sort of key financial terms and the broader macro backdrop from company management starts to become worse and worse. So the status quo, like you said, the earnings season, the status quo in Q2, fine, I get that. The outlook, much, much, much different.
All right, Max, thank you very much. I also love how we say you're Max Bear, because it sounds like we're trying to rename you. Of course, we mean Maximum Bear. Max, always a pleasure to have you on. Max Kettner, HSBC Chief Multi-Asset Strategist. Well, coming up on the program, a search for classified White House documents. The FBI raided former President Trump's Florida residence yesterday. We're going to discuss that next with Julie Norman of University College London. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. You're looking live at the Principal Room. Coming up later today, an exclusive interview with the CEO of Hyatt Hotels. That's at 10:40 a.m. New York time. This is Bloomberg. This is Bloomberg Surveillance Early Edition. I'm Kailey Leinz with Matt Miller in New York and Danny Berger in London. Anna Edwards is off today. Well, federal investigators raided former President Trump's Florida residence yesterday as part of an investigation into whether he took classified documents from the White House when he left office. Trump was in New York City at the time of the raid, but issued a statement saying the investigation is part of an attack aimed at keeping him from running for president again in 2024. Julie Norman, lecturer in politics and international relations at University College London, joins us now for more. So, Julie, let's talk about 2024. What impact could this have on the presidential election 2 years from now?
Sure. So that's certainly the big question today. And it's important to know that there's still a lot of details that are unknown about yesterday's search, what was found, what it will mean, if there's going to be any kind of criminal prosecution, still a lot of question marks. For Democrats, what this underscores is that Trump is still in the midst of multiple legal battles, some of which may certainly impinge on his running ability in 2024, especially this one if it was found that classified documents were mishandled or destroyed.
Well, and Julie, in a way, this feels different from the other investigations, because typically what they do is they subpoena documents or they make that request and they don't get them. In this case, they went in there, and at least according to the president, they broke into his safe and took things. So is this an historic event, or is he, the Teflon Don, nothing sticks?
Well, I think both things can be true. I mean, on the one hand, this is unprecedented, a crossing of the Rubicon, if you will, with very, intense political and legal ramifications. The first time that the FBI has searched the home of a former president and potentially a presidential candidate. So very notable in that way. And I think we'll probably hear calls for justice to be as transparent as possible as to why the search took place and in the way that it did. So I think some of that will still be needing to be clarified. But you're right that whatever their justification is, however warranted, the Trump and his allies are already going to be using this really to galvanize their own supporters. Trump has always doubled down on the narrative of grievance, of persecution, especially by the Justice Department. So whatever direction this goes, from I think a lot of our perspective, this will play very largely into Trump's hands and will actually motivate his supporters, probably rather than dampen any kind of support for him.
This doesn't seem, by the way, related to the January 6th attack on the Capitol, right? So we're just talking about, it could have been just documents that he, piled in together with other documents. No one was really paying attention. He had aides packing his stuff. They knew he wouldn't tolerate them asking which, to take and which not, so they just put them all in. It seems to have nothing to do with the idea that he may have been involved at a deeper level with the attack on the Capitol?
Sure. So I think it's important to underscore that, right, this was a separate investigation by Justice looking into the mishandling of documents that was happening parallel to Justice's investigations into the January 6th events. Whether there's going to be crossover between those two things in the future, we don't know, but the investigations have been separate up to this point. And as you said, there were known to be at least 15 boxes of materials ranging from letters to foreign dignitaries to cocktail napkins, really a mix in what was shared before. So again, we don't know what was being searched for in this search and if it was found. So in order to do this search, Justice would have needed a warrant, a search warrant from a federal judge that would have indicated some kind of probable cause. But again, we haven't heard from Justice yet what that is. And so a lot of the details will still be, we'll still have to wait and see what exactly they were looking for and if they found it.
Julia, to go back to this idea that you mentioned, that this sort of feeds into the narrative that Trump and his allies have been saying, this idea, elections are rigged, those in D.C. are against him. I mean, we've already seen the House Minority Leader McCarthy tweet about the fact that they're going to start looking into Merrick Garland, the Attorney General, about this. Does that have to factor into the thinking at all of the justice when they do this sort of stuff, when they take an unprecedented step of not offering a subpoena, but instead going in with a warrant?
Well, you have to assume that it did. I mean, what we have seen from Justice so far and from Garland as Attorney General himself has really been caution moving against Trump up until this point in quite public ways. And that's one reason why yesterday's actions were so monumental. Justice has gotten a lot of pushback from the left, from Democrats for not being aggressive enough on Trump. And one thing that we've heard from Garland is look, we don't want to push this unless we know we don't have wiggle room on this. It has to be a slam dunk if we're doing anything that's going after Trump directly, because it will be seen as a politicized move. So you can only assume that those conversations were happening in the lead up to this. They knew that it was going to be extremely sensitive. They knew there was going to be political blowback, to say the least. And so we have to assume that there was some rationale for it. And again, I think that's why there's going to be calls for Justice to be a bit more transparent into why they made the decision to do it.
All right, Julie, thank you very much for joining us today. Julie Norman, lecturer in politics and international relations at University College of London. Now, later on today on The Balance of Power, we're going to hear from Congresswoman Haley Stevens, a Democrat from Michigan. That will be at 12:30 p.m. New York time, one not to miss. This is Bloomberg. This is Bloomberg Surveillance, the early edition. I'm Danny Berger in London with Matt Miller in New York. Also joining us now is Tom Keene, co-anchor of Bloomberg Surveillance. And Tom, more than 24 hours, but not much more to go until CPI. I can't imagine you're looking at anything else for your single best chart.
It'll be the nuances of CPI, many different ways to slice this. We'll do that tomorrow morning at 8:30 in New York. Danny, what this is about is what Americans are talking about. It's not food, it's not gas, it's not tuition and the rest. It's living. It is the price of rent and the rental shock that's out there. It is across the nation, particularly some of the lower rental areas, really seeing surges. This is OER, owner's equivalent rent. I'll let Mike McKee explain what this is, but this is the number that people use. In the 80s, we had high 5%-ish owner's equivalent rent. Down we went. I picked an area of about 3% per year, and we are well out over 3 standard deviations with a spike up here way off that 3% line, and that's the pain that we're seeing in America.
Yeah, the rent is just too high, Tom. Who do you have on the show? I'm really looking forward especially to one guest from Renaissance Macro Research.
Well, it's going to have Neil Dutta on, and that's good because he's the arch optimist of the American economy. He can write cautious about the economy, but it'll be a good update to see where we are in the makeup of GDP. Anna Hahn will join us as well on the equity market, and so much doubt out there about what's going on. Claudia Sahm, that will be interesting. She'll be fired up about inflation.
Yeah, very much looking forward to the program, Tom. Thanks for joining us. Tom Keene up next with Bloomberg Surveillance. Now, in a wide-ranging interview that we did with Cathie Wood, we discussed ETFs, crypto, the Fed, and the economy.
If our outlook for deflation is correct. Cyclical deflation and secular deflation. Secular deflation associated with technologically enabled innovations. That's a good deflation. That's not a bad deflation. If those two are correct, that would be the best environment.
So this is a really interesting idea from Cathie Wood, thesis from Cathie Wood that she first shared, I believe, with Ed Ludlow, our tech reporter from the West Coast, when the two of them converged on Bentonville, Arkansas. And it was spurred by really Walmart and Target saying, you know, we've got too much stuff here and the consumer's not buying this stuff. The consumer, as we heard recently in the earnings report, is buying food and gas instead. So Cathie Wood, ahead of this big CPI print, still thinks that we might be in a disinflationary environment.
And look, you know, she's not the only one. Jan Hatzius over at Goldman Sachs says if you look at gasoline prices dropping 20% from the peak of last month, that also lends its hand to a disinflationary environment. But Matt, look, I can't help but be kind of a cynic here and say, look, if we are heading towards disinflation, the Fed stops hiking interest rates, that's going to be good for big tech. It's going to be good for profitless companies, and ARK holds a few of those.
Are you suggesting she talks her own book? Yeah, that could
no,
be.
Never. No one ever does that.
That could be the case. And also, I think gas and food are still incredibly expensive, even if they've come down from the highs that we've seen in the past few months. Certainly for consumers that are struggling to meet the rent, for example, Cathie Wood is not going to be any kind of calming influence.
No, certainly not. But look, I mean, some of the back off of the commodity sector that has helped. But as you point out, it is still stubbornly high. We'll get more clues as to just how high, how much inflation is impacting the consumer with tomorrow's CPI numbers. That, of course, out at 8:30 a.m. New York time tomorrow. Well, that's it for the early edition. More surveillance up ahead. This is Bloomberg.